BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top trade. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi.
Good morning, everybody. Welcome back. Let's have a look at some of these charts. Basically Bitcoin, and we'll have a look at traditional markets because gold took a hell of a fall yesterday, way more than Bitcoin did. So just put that into perspective. Obviously, altcoins took a very hard downside move. So we know that's something that we've seen. What we watched it happen yesterday. Fair enough. And on the Patreon, we recognised that a lot, not all, a lot had come down to entries yesterday. And at the moment, they're kind of holding at those entries, which offers a possible opportunity, I suppose. Now, going back to a couple of weeks now, and I was buying a few alts, wasn't I? I picked up VeChain at about 3.2 cents. ICP, more or less where it is right now. Those are dollar cost averaged first entries for what I consider to be long-term positions. Now we're back down to where they were because they're the first entries. Back then I was kind of looking and maybe not assuming, but if it were to come down, I would have been relatively happy. Not so much to buy more of those particular coins, but other coins that would then meet their entries. And so the down is a blessing for those with a broader view on the market. But right now, let's focus on Bitcoin. Because Bitcoin's the driver of all of this. I could maybe make the case that actually gold is the driver of all of this. Gold, like I say, 3.5% in a day. That's a big deal for gold. Doesn't normally do that, but it did. So what next? Right, so it's reasonably simple as far as support is concerned. We've got a 21 exponential moving average, which is where we were supported yesterday. A beautiful kiss on the cheek for that. And this morning, well, we closed above the 20 as well yesterday, and now we've seen a very small, very delicate kiss for the 20 moving average. It was centre of that Bollinger Band, basically. So Bitcoin is currently still being supported in terms of an uptrend. Still looks okay as far as wanting to do an uptrend is concerned. So it's a bit early to call for further downside. However, we do have to assume that maybe next week might be coupled with carnage if gold and maybe even stocks, which haven't actually done it yet, start to come down. So let's just recognize that for what it is. So if we do come down further for Bitcoin, currently we've got a 200 exponential sitting around 67,600, 200 simple moving average 66,800, and then the bottom of the range, which is back down at 65,400. All of these perfectly fine to come down to and actually being relatively bullish, maybe even getting a reversal from there. Bang up, bang up. It's unfortunate, but for whatever reason, this major resistance is such a problem for Bitcoin. It just can't handle it. Rejection 2, 3, 4, 5, 6, 7, 8, 9, 10. 11, 12, 13, 14, 15. I mean, just countless. The sell walls around 71,000 are just unbelievable. I suppose thinking about it, I don't really know what to make of that, to be honest. But other than the fact that it's real. So it's like I was saying yesterday and the day before, if we break it, we melt straight up, super big, because there's such selling going on at these areas. Once the sells have been depleted and there's no one left to sell, the sell walls will just launch straight up, and we'll see a huge move for Bitcoin, huge. But until then, it's just a battle, really. The main thing about this this range that we're stuck in consistently, I suppose, is that it gives us more opportunity to maybe buy into dips. If we do lose this Bollinger Band and this 21, then yeah, I would think that we could sack off the idea of the 4 hourlies, really, and we'll be looking for 65,000. We'll call it roughly 65,000, and maybe, if we're lucky, we can revisit the 58s again, maybe. I don't think so. I think what we're looking to form here is another higher low, which means that we would likely see closures above 62,000. We might dip down a little further to 63, but it's very early at the moment. And again, this is a weekend, so there's not much really going to happen at the weekend, especially when traditional markets over here, like gold, for instance, are the ones that have driven this move. We don't really have too much conviction about what happens in the weekends. And whatever does happen at the weekend, I would imagine be sold off on the Sunday, in the Sunday afternoon, Sunday evening, just for safety reasons, really. But that doesn't mean that we can't take advantage of lower prices as and when they come. Plot areas in a rational state of mind. Hopefully you can do that, and we can all be rational about where we want to put our buy orders. And then sail up for what I would imagine to be a very nice bull market over the next 18 months, year to 18 months. We looked at the total 2 last night and the total 3, recognising that on the weekly we're bouncing for total 2 on the 10 exponential, which was nice on the weekly. So again, pretty bullish still, to be honest with you. Pretty bullish situation for total 2 on the weekly as of this very moment in time. And same sort of deal on the total 3. Hit that Bollinger Band centre as well on the total 3. So, if you're looking for long-term positions, dollar cost averaging, and starting the ball rolling for building up a portfolio, which is what I've been saying is probably a bright idea to do during this period where alts aren't very convincing. But I'm assuming I'm pointing to further upside over a longer period of time, and that buying into alts, especially some of these alts with relative value, or assumed value, should we say, is probably an okay idea. Because the structure of this chart is one of a bull market, and until we lose these areas down here and here, we should still treat this as a massive uptrend and nothing more than a massive opportunity for the long term. Recognise it's a weekly here. Weekly is a long-term chart, long-term time frame, points to long-term movement, and at the moment we're above all moving averages, so you have to give it the benefit of the doubt. You have to look at this chart and go, it is what it is. I can see what I can see. It's telling me one thing, which is that currently structurally it's okay, and if you're going to bounce from anywhere, it would be from these areas, and you would be looking for higher. There's probably not fitting with what I've seen on Twitter just this morning, and who knows what the other YouTubers are going to be saying about today or whatever. But you stand back and recognise what it is that you're looking at. That is it. The only reason you'd imagine this area break would be through a huge sell-off, like we saw after this parabolic move here in May, and then we come crashing down. Prior to that, in the beginnings of in this sort of beginnings of the bull market, which is where I think we are more or less right now. So I think this is where we are right now, sort of coming down to this area. And again, by saying that, I'm not saying that we're going to do this in the coming months. I'm just saying structurally, we've reclaimed certain areas, we're in a bullish position, and we're coming down, we're retesting the centre of the Bollinger Band here. This is, again, total 3, so this is talking about altcoins. I don't think that we're going to be breaking down horrendously for altcoins. Altcoins have been broken down a lot already. We did some really good trading. Remember, we were buying altcoins last October. That's when we were talking about it. October. We did it all. Started to sell throughout December, through to March, and then only a couple of weeks ago did we start to redeploy sort of decent amounts of capital. And again, I'm still 70% in cash, so I would welcome further downside, because I want to deploy more cash, because what I'm expecting eventually would be something like this, which should lead us all the way up to brand new all-time highs for this chart, and obviously altcoins particularly. So downside is welcomed. That's why 70% cash is what's sitting in my trading account, really, to be honest. So I'm not afraid of it. I would actually love it. But at the moment, it doesn't look like it wants to go down an enormous amount. Now, on the Patreon last night, we recognised that there were some altcoins which looked awful, with terrible charts that are going in, which are already in established downtrends. And there are a lot of charts, actually, that are in established uptrends. So no altcoin is created equal at all. In fact, there was a huge polarising difference between some altcoins. You just can't believe what we were looking at. Like I said, some are bullish, trending up by the dip to continue up. Some wrecked, continuing to get wrecked, nothing more than rejections on death cross retests. Which is why I suppose there is value to the Patreon if you want to join that. But all I'm trying to point out right now is that whatever the market does in the interim is okay. It is okay, and it's going to be driven by Bitcoin, which is also basically going to be driven by what appears to be gold, and hopefully stocks. Stocks, brand new all-time highs, continuing with its all-time highs. S&P, look at it, just powering on through. However, we have overheated money flow index. We have a bearish divergence read. We have a bearish divergence read on the RSI now as well. And next week we have the Fed talking about stuff which will likely have some kind of impact. I can't predict it. One and the only thing that we would ever use is oil, which we recognise at this point now is going down. But if we reclaim the 200 simple moving average on the weekly here, it might be an opportunity to try along just in case there's a turnaround on oil. But for the moment, while being below these moving averages, you would expect further downside. If you reclaim it, again, you're not going to see this until next week, then maybe we see further upside and a bigger break towards 93. So there's opportunities across the board in all markets, really, whether you're trading up or down, or even sideways with bots. Completely your call. Right now, it's probably best to sit back and watch and see how Bitcoin wants to behave over the weekend. I don't do much trading over the weekend at all. It's more or less impossible with two little kids. So I will be casually watching price action and seeing if we can hold above this area or break down below it. Like I say, I've started a dollar cost average to buy more HODL bags a couple of weeks ago. Less than 5% of my available cash went into that. So the cash that I used is decent money, but percentage-wise shows my confidence or lack of confidence that was the major area, and I would hope for further downside anyway. But currently, as of this very moment in time, the rule of the trading chart suggests actually bounce probably from here, and unless we see closures below those areas on total 2, total 3, and Bitcoin, we should assume probably continuation up. Right, I'm going to leave it with you there. Thanks for watching. Take it easy.